Great to be with you.
Okay, yeah, thank you, and thanks everybody for coming. I'll just give the very quick remark of how Chris wanted to run this session, and then he will be the main guy speaking, and I will try to keep him on the subject. So we are much more interested to have a conversation rather than a presentation. So please at any time feel free to submit your questions and comments through the Slido app. And as soon as we get enough of them, we can interrupt and start answering the questions. But I want to start from to give Chris an opportunity to introduce himself and say what he's been doing for the last, couple of decades now?
In a way, I think that's right. Anyway, it's great to be with you. We thought we would do something differently and not have yet one more slide presentation and have more of this conversation, I think, which would be very powerful. I get asked a lot, both as a former entrepreneur and as a tech investor now and venture capitalist out of the United States, what's the most exciting technology change that I see right now? And I can talk quite well about artificial intelligence and genomics in many areas, but I actually think the most important and exciting tech innovation today is not the technology at all, but the access to it everywhere in the world. And if any of you had a chance to go to the discussions from Dubai or have the discussions from Indonesia or the discussions from Brazil, which were outstanding at this conference, you understand what I'm so passionate about, because the dynamic which has changed in the last 3 or 4 years has been profound in terms of the caliber and quality of startups rising literally everyone else. I come at this as an entrepreneur. I actually ran all the tech businesses for a large media company in the United States, and then I broke out and I did a startup backed by Silicon Valley in online health. But one of the things that I did was I traveled all over the world and outsourced technology all over the world. And so I was able to see firsthand the rise of talent everywhere, which we assume, but also the caliber of startups. And that's why I formed this new venture called Next Billion Ventures. And we invest side by side in emerging markets only with the best local venture capitalists. And we're backed by some of the most famous people in Silicon Valley to give them exposure to this dramatic change that's happening in the world right now.
Yeah, well, I want to pick up on one word that you mentioned, and it's outsourcing. And I think it's very well understood that a lot of things could be outsourced in the emerging economies. But the next word that you mentioned was a startup. So what's is there a difference, or what's kind of the connection between actually outsourcing the work and having innovation done?
No, I think there's a profound difference, and I think up until the last maybe 10 or 20 years, particularly in emerging markets, the word outsourcing and technology were almost the same words. It was literally the ability to take whatever you wanted to do and do it more cheaply or to do it more cost effectively in other markets because of the outsourcing ability. When you now meet with entrepreneurs in the markets where I focus, they're not thinking about being outsourced to at all. They're really thinking about solving problems that are not being solved, or they're looking at disrupting old traditional businesses which are not getting as current as they should in light of the technological changes available.
And what are the hot areas? And I'm not sure if it's coming kind of from the proactive or reactive way. So so what do you think is hot happening there? And on the other hand is, what is it that you're looking for?
So the focus geographically, to give you some grounding of where I look overall, I have 3 hubs. So I look at the Middle East through Dubai, I look at Southeast Asia primarily through Singapore, and I look at Latin America fundamentally through Sao Paulo, Brazil, and Mexico City. And everything they do is proactive. There's nothing that's being reactive. Again, if I sat here even 5 years ago, a lot of the companies that we saw in emerging markets, this was true very much of Korea maybe 20 years ago, were very much trying to follow on things that have worked in the West, or now of course are working in China, and simply trying to replicate them. You see some of that, but much less of it. Right now, these are companies who look at problems or opportunities in their markets and their terms. They may have some familiar markets, but as many other panelists have talked about, they're doing it very, very locally, very attuned to specific local needs. And when they do it right, when these startups in these emerging markets do it right, they do something that also never happened before, which they beat America, they beat Western companies that are there because they pass them quickly in their understanding of locality. I think the most obvious example is not really a defeat, but it is instructive, which is Uber did the largest acquisition in their history right when they were going public, a time when they should be most conservative, and they did that in the Middle East. They bought a company called Careem for $3.2 billion because Careem was so massively successful in ride sharing and other services on the Middle East terms. They were not just trying to replicate Uber. They were making companies for the Middle East. we all here know far better than anyone, very similarly in Grab and now Gojek. These are hyperly local companies with amazing technology that is in fact a moat from competition that can come from elsewhere.
Now, again, let me get a little bit of academic on you. So we keep mentioning the emerging markets and that, growing economies. What are they today? So you mentioned that it's probably not Korea today, but maybe Korea 20 years ago. So are there any specific definitions, how we define them? I mean, we usually say we know when we see them, but is there anything specific how you can say, okay, this is still emergent, or this is mature or not?
Yeah, I think that there are three maybe vectors that you can think about it. The most important in one level remains the openness of rule of law. The second is the access to technology en masse by both consumers and businesses overall. And third is the pattern recognition that's being built by successful companies being built, encouraging other companies to succeed. And this to me is one of the really very exciting things about quote-unquote emerging markets today. It will surprise you that, maybe not surprise this audience, but many audiences that I talk to, you'll be surprised to know from a rule of law perspective, some of the most forward-leaning rules of law in fintech are actually in Brazil and in Indonesia, very proactively working hand in hand with the entrepreneurial sector to try to facilitate something. So you've gone from an emerging market to an emerged market in that kind of an element to some degree. The idea that now companies are getting very scaled in every country means that there's a whole new generation now of tech companies that know how to make it happen. And one of the beautiful things, you'll see this in Korean, we've seen it in Grab, you see it in Mercado Libre in Latin America, is that when these companies become very successful, 100, 200 of those employees spin off and they start building scalable enterprises now. That's a sign of moving, I think, to emerge. And then the third is the one that I touched on, which is there access to technology? And that's done. I mean, most countries now that we look at 50, 60, 70% penetration of smartphones with audiences under the age of 30. So we're in the early stages of there. That's the right recipe. That doesn't mean that an emerging market has passed, but I'll make a bold prediction here that I think within 10 years, we won't even use the word emerging market ever again. That doesn't mean that there won't be some markets that lag. That doesn't mean there won't be some markets that even fail very often because of failed appreciation by government. But I believe that in 10 years, that as term, emerging market, will disappear in light of what I'm seeing happening in Southeast Asia, what I'm seeing in Latin America, and even parts of Africa. And I think Korea is a case point of it. 20 years ago, people referred to 30 years ago, people referred to Korea as emerging market. It's beyond emerged, it's a leader market now.
So we sort of, we can claim that we're wrapping up the conference, right? So we can try to formulate and reflect on things that we've heard. And there were several talks about the ecosystems. And ecosystems are usually considered local. So do we have any insight, again, difference, existence of ecosystems, building ecosystems? How you think, are they really that important?
I think that ecosystems are unbelievably important, but I think the definition of them is changing from what they once was. So there was a time when everyone asked the question, which I think in a good way nobody asks now, which is what is the next Silicon Valley? And there was a model that was felt that if you could replicate California, the education system, the rule of law, the network effect of talent, and you could plop that in any different market, that's the way an ecosystem would be built. That's not the way life plays out. Silicon Valley is a very unique and quite remarkable thing. But what we find around the world is that ecosystems are developing in very unique ways, tailored to those markets themselves, and that's why the most local and interesting companies are being built in those markets on their terms. The other thing which excites me no end is that the idea that an ecosystem is only formed physically, geographically, I think has some part in truth. When you're around a lot of successful individuals and you can see them and you can touch them, that does have a flywheel opportunity. But now through technology, as many panelists have talked about, amazing companies can be built, amazing shared learning can happen through technology wherever you stand. So I'll give you two concrete examples. One is, in many of the markets I go to, there's not really yet a great supply of data scientists. And when they are, they often get sucked up by some of the biggest technology companies. But in this day and age, the single most important asset you really could have in any kind of company for the future of machine learning is unique data sets. And every entrepreneur that I know who's building a successful company is sitting on unbelievable unique data sets. Yes, it's ideal if they have great machine learning and AI engineers, and many of them will bring them in, But if they can't find them, they go around the world. That's something we wouldn't have talked about 5 years ago. I loved in the Vietnam panel, I don't know if you heard this amazing woman talking about Vietnam, who said the ideal, I'm going to get this wrong, but she said the ideal Southeast Asian company would have its corporate operation in Singapore, it would have its technology from Vietnam, it would have its sales force in Thailand. And that's kind of fun to think about, but lo and behold, it's actually doable now, and it helps redefine how we think about ecosystem as not just a physical, geographical constraint, but effectively a conspiracy of excellence wherever it may be.
So you start giving some examples. Can you bring a few more specific examples of the successful, interesting stories coming out of this?
Well, we talked a lot about ride sharing at this conference, and there's not a lot to add to it. I don't know how many of you got to the Gojek panel, but it was a fantastic discussion about not only how some of these companies scale in a core business. So when I was in business school, it was always about focus, 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 do one thing. But what is so exciting now is once these companies start to get scale in one area, sitting on amazing data about their customers and amazing data about their merchants, all of a sudden it becomes quite obvious, not even a stretch, but obvious that they should offer payments. And if you offer payments, you can offer delivery. And if you offer delivery, you can offer tickets. And all of a sudden, to see a company like Gojek have 24 services launched in a matter of a handful of years, once would have been used as distraction and now is looked at as competitive advantage. And you see this now in companies in Latin America and others, which once they get to scale, they're thinking in parallel about how they can leverage their core asset. FinTech is the most obvious example of this. There are amazing companies that I've seen that have a wedge into getting into something by building credit card access to people never had it before, or new banking more affordably than they never had it before. That's where they go in to get their scale. But you know those great entrepreneurs, the women and men are thinking, okay, once I've built that area, here are services that I can layer on. And when you stop to think about it, that's not crazy. That's how traditional banks got formed. The only difference is these entrepreneurs can move literally 3-4 times as quickly at a fraction of the cost and the ability to reach audiences because of technology that would not have been possible if we had talked about this 5 years ago.
I think it sounds very exciting, and you're definitely very excited about what's going on.
I think it's fascinating.
So now, I still have a feeling that the big companies and VCs are not really lining up to invest and participate of what's going on in the emerging economy. Can you give a hint of why, or what needs to be done to change that dynamic?
It's depending which investors you're talking about and which big companies. You know, if you were to say, is SoftBank taking this seriously? Obviously they are. Are we saying, does China understand this? Obviously they do. Are American companies doing this? Some of them massively. I don't have to spend 15 seconds describing to Patrick Collison at Stripe this phenomenon. And this is a guy who went global day one. I mean, he was thinking about global ramifications day one. This is a guy who opens up 500-person operation in Singapore, not the classic sales office, 500 engineers to help better and adopt and localize the process of what they want to do overall. So the ones who get it, the people I call global day one, they're absolutely there and rising in some ways. I think the biggest lagger in my backyard is Silicon Valley, because Sequoia will invest in many of these markets, Excel invests in some of them, but most of them at the end of the day, they're a little bit piecemeal about it. And you asked the great question, which is why? And one very good and obvious answer is the best of American venture capital is seeing the best of American companies. And these are profound investment opportunities. Secondly, they understand that the best American companies are going to be building their businesses in emerging markets. So you have a choice. Do I actually try to figure out for the first time how to enter Southeast Asia? Or do I have in one of my companies as a portfolio Stripe? And I would say to myself, if I'm in Stripe, if I'm in Facebook, if I'm in Dropbox, I am global day one. It's just that I don't have to go out and find those individual entrepreneurs. I believe that this will change. I believe that lots of companies, Andreessen Horowitz has now invested in several companies on a one-on-one basis in Latin America. I think more and more of these investment houses are going to look to emerging markets. But the fact of the matter is, who cares? Because if they don't, there is local money, local VC, family offices, China, SoftBank. Korea is now, by my view, the #1 venture capital investor in Vietnam. Like, no one's waiting for Western money anymore. The world has moved, and you make a decision to either engage in it or not.
So you think those little creeks will eventually go into the big river and just overflow?
We'll see. It's a great question. We'll see.
Yeah, but again, my concern was, again, as you probably, everybody have heard, is that when you talk to the VCs, they say that they prefer to invest when the decisions are made in the understood geography. Is that something that also playing the role here?
Look, I think understanding geography in whatever form is paramount. There's been nothing more foolish and more failing than global VCs who show up in a market and fly out. Right? If you do not either have a presence on the ground or are partnered with deeply, deeply high-integrity character people that you're building a multi-year, multi-generation relationship, you're toast. But you know, another group that is here that is doing amazing work from America who gets this is 500 Startups. And they've done this in the seed stage, and I think they've done it exactly right, because they've combined the kind of Silicon Valley understanding and the kind of breadth of what they've pulled together building the acceleration program there, but they have boots on the ground of hyperly local, hyperly emotive, hyperly capable investors in separate funds who get up in the morning, going to bed at night, thinking about that market on their terms. Then the beauty is they get all those people together who compare notes. And as I touched on before, I have to tell you, when I meet companies in Vietnam, in Jakarta, in Brazil, in Cairo, who are in the same industry, 85% of those conversations are much more familiar among themselves than their compatriot with Silicon Valley. Like, it's not that the Silicon Valley analogies are not interesting, it's not that they don't show some vision of what can happen, but when I meet with the women from those 4 parts of the world, language is different, culture is different, geography is different, but day-to-day what they wrestle, last mile logistics, regulation, adoption, education in the marketplace, it's almost the same conversation. And groups like 500 Startups get to that. They get that not only do you understand local, but you have to understand what it means to be building technology on its own terms in rising markets.
So what about the market focus? I mean, obviously, the emerging market, the small markets, right? So on one hand, they're probably too small a target for the multinationals, as you kind of mentioned. On the other hand, probably the most interesting startups are the ones from there that's looking for the globals. Or is there enough going on internally to make it interesting for investors like yourself?
It's like almost everything in life. When you meet that woman building a company, and you look in her eyes and you get a sense of what she wants to do and how she wants to scale it, is where different kind of venture capital will be interested into it. The best of the entrepreneurs that I've met in small countries, smaller, not small, but smaller countries, like Colombia, like Thailand, when you get them talking, they see what they can do here, and they understand what can be done to be replicable in other rising markets, either geographically proximate or elsewhere. That vision is in their teeth right away. They are global day one. They just understand that if they can actually win their knowledge in their local market, that's a first great step. Now, if you're a country like Indonesia, if you're a country like Egypt, you've got a wonderfully sized market right then and there with good adoption. That gives you a lot of traction. But the best companies that I've seen that have come out of places like Egypt will keep operations there. They'll go to Dubai because they want to expand to, as one of the speakers said earlier, to the 3 billion people a 4-hour flight away from them. So that just has to be about the vision. 5 years ago, 10 years ago for sure, I would meet entrepreneurs in rising markets, and honestly, their visions were pretty narrow. If I could win Jordan, like, I'm very happy. And by the way, there's nothing wrong with that. You can make a very successful business doing that. This new generation rarely is that way. They're like, I understand what I can win now, and I can understand the complexity of how I can go elsewhere. But they understand that elsewhere also is hyper-local. And if they don't have the good talent, if they don't have the good local presence, they'll run into the same problems that a Westerner runs into going into them as well. I meet very, very few, or the ones that I've met have failed, who have said, I'm a Brazilian company, I'm just going to open up in Mexico tomorrow. No problem. That no, you know they're not going to work. But they say, look, I've been looking at Mexico for 3 years. One of my co-founders is Mexican. We know the venture capital is there. We know exactly the general manager we're going to put there. Success breeds success.
So that's more about the entrepreneurial stories. What about sort of the more classical technology-rich businesses with intellectual property? And so is there something exciting going on there? And I know we've heard some of the large companies especially saying that for them, sometimes the barrier is the intellectual property.
I think that the barrier could be intellectual property, but I honestly think the greater barrier for some of these companies is cultural and psychological. I think one of the things that largest companies have had difficulty managing themselves, put geography aside for a moment, is just allowing innovation to thrive and not be buried. It is a very rare organization that has either been able to build in their culture continuously to be able to unleash that. I think Microsoft is actually a good example of this, which is funny. 10 years ago, we would have thought Microsoft was a counterexample of this. Like they just keep moving forward by selling the same stuff with minor upgrades. They are an innovation company now, and I think it's been very interesting how they've established that in their culture. Other companies kind of do it arm's length. Other companies will set up different divisions to do it. But at the end of the day, the first thing starts with the culture and the desire to realize, one, that there's lots of interesting things happening that they can't do best, and secondly, how to engage with that quality without squashing it. The best understand that, the others, I think, end up not playing very well, and then entrepreneurs don't want to do business with them.
Well, the next one, I think I know the answer, but I still want to ask it and kind of to see, maybe we'll stir up some of the questions. So what should be the relationship? Again, are we from the sort of developed economies, are we coming and teaching people there? There are others, is there something to learn? I mean, what kind of the relationship on the business side? Do we need to have more conferences like that, but in different places? So how do you see that happening?
All of us have something to learn from all of us all the time. The idea that this is something where America comes in and teaches people, if that were ever true, it is absolutely not true now, except to the degree that great companies have great experiences and great pattern recognition. If there was one book I could have read when I was building my startups, my companies that I grew, was written after I did them, was Ben Horowitz's Hard Thing About Hard Things, which I think is one of the most important business books written in 2 decades. The fact of the matter is there's tremendous amount to learn from him. At the same time, Ben wants to learn from other people. So this is about reciprocity. What's the best experience you can bring to bear? What's the best experience he can bring to bear? How can you co-author success in any given tech opportunity or any given market? When that co-authorship happens, there will be success. If anyone thinks that they've got a dominance of knowledge in this complexity world, that's hubris, and I can't short private companies, but I would short that company on that alone.
Right, so that brings up the old definition of the open innovation, right? That the knowledge and experience is equally distributed around the world. So now I want to give you a kind of opportunity and also to, again, ignite the people in the audience. Can you tell about your kind of investment strategies, what you're personally looking for, what kind of project excites you, and maybe, again, some of the success or failure story?
So geographically, as I touched on before, there are 3 hubs that we look at. So again, Latin America is Mexico, Sao Paulo. Dubai is central for the Middle East, which is a lot about Egypt and Saudi Arabia. I'm on the investment committee of a couple of funds over there as well. And Singapore as an arc, not only there's very interesting things happening there, but of course Indonesia, the market size. And I just think Vietnam is really incredibly exciting, and I've met great entrepreneurs in Thailand. But I think about them as hubs. We will only invest, as I mentioned before, side by side with great, we know 4 or 5 really wonderful VCs intimately in each of these markets, and if we find something, we bring them in. If they want some of our pattern recognition from the West or these other markets, we will be very happy to do that. We would never go in alone because of the nature of the distance that we travel. But the sectors are the ones that you can imagine that I just love, because this is what's happening in rising society. So fintech, and particularly lending, we think there's an unleashing now of financial inclusion that's not only about payments, but the ability for small businesses and individuals to be able to have access to credit, which we think will be a revolution in their societies that they've not been able to have before. So that's one that we love a lot. Marketplaces and e-commerce, we think, are pretty well established now by a lot of the big players. But for example, property tech, the buying and selling of real estate, is actually very infancy in most of these markets. I think they're a slog. I think they're very hands-dirty businesses. You have to understand what it means to be on the ground. But if you understand that, and you have the right entrepreneurs, you can use technology to leverage upon that. So that to us is very important. And therefore, and related to that, we really like logistics, last mile and trucking and that kinds of things. I have to tell you, this is different than a lot of the Silicon Valley folks who think that software platforms will wipe things out, which they often will, right? I mean, the WhatsApp of most places in the world is WhatsApp. I mean, I'm not saying that that has gone away, but when I meet entrepreneurs who really understand the hands-dirty problem solving and can navigate that, and are very sophisticated about layering technology to grow more cost efficiently, to reach audiences more cost efficiently, and to be able to scale up quickly. I love that. There's a company that we've invested in through a different fund in East Africa, which is literally an ag tech company that is allowing distribution to the 100,000 fruit and vegetable vendors all over Nairobi. They've just completely disrupted the market. They're growing like a rocket. They first understood logistics, literally in trucks, figuring it out how to move things. Then they brought to bear technology on it. And of course, as you all know, Kenya is one of the great mobile payment countries on earth because of M-Pesa. They're now going like this. But that's the kind of stuff I love to see.
And as an investor, what's your usual position? What's your level? Kind of again, for the benefit of the people in the audience, so that you maybe have a line waiting for you at the end.
We tend to look a lot at A-level companies and B, which of course vary in different markets. We've dropped and done entrepreneurs that we love, seed, 500,000, that kind of a thing. And in a way, that's where it all begins. I think the thing that attracts us almost as much as region and sector and partners is that entrepreneur. When we meet that woman, and you know them when you see them, like it's in her teeth to solve this problem, and you can slow her down, but you can't stop them. That will very much align, one, how much money we want to put in, and what other co-investors we may bring to bear into them.
You participate in the management, on the board. What kind of again? So I'm not trying to open your books, but just to give.
I'll answer anything to you and anyone, and we're very transparent people. As a former entrepreneur, I love being on boards. Actually, that's sort of true. I mean, I actually love advising more because then you don't have to quite kick people's asses when you're on the board. Fiduciarily, you've got to be tough when you have to be tough. But because we're a small group, because we cover a lot geographically, I would much rather the board seat be in the hands of someone local that I admire, and maybe we would take an observer seat so that we can be helpful and more regularly in touch with the company.
And will you follow on the next round, or are you happy to exit after the...
No, I think at the end of the day, if we believe in the entrepreneur, we would love to certainly hold, and if we have the access to participate more, we would want to do that. I mean, it's a very interesting argument because I know in these markets, there's actually a lot of opportunity for secondary because up until recently, follow-ons and exits were still quite few. And so it's tempting to want to take a secondary. But what I found, particularly in American investment, more often than not, if you just kind of hold and ride, it's going to make up for that one you exited that actually does very well that you're sorry that you exited for. And so I try to want to be in there for the long haul.
And I have one more question that just come up in my head. So sorry, I didn't tip you on that. But so what do you think about the crowdfunding? Because that's definitely happening a lot, especially in the emerging economies. I mean, we in the US just got allowed to do it, but the rest of the world been enjoying it for a while. Do you think it's what's the positive and negative, and what's your relationship with some of the platforms?
Look, I think it's depending what kind of crowdfunding and for what need that you wanted overall. So I've seen a lot of great entrepreneurs who, frankly, they just need enough money to get through a prototype or to do a marketing aspect or whatever. And if they can do it and it's efficient, they don't give up any equity in the company, and they're not dealing with the death march, which is raising capital. Because I can tell you as an entrepreneur who's had to raise capital both for my companies and for a fund, it's a terrible, terrible experience. But at the end of the day, it more often than not isn't scaling. So there's so much that you can really do with that to really get the amount of capital to fight in these hyperly competitive markets. And then secondly, and I'm a little bit biased on this, I'm sure, but I still think good venture capital is a cottage industry. And what I mean by that, that expertise, that connection and relationship with the entrepreneur, the ability to really co-author with them, knowing that she leads the show, but you're there to kind of support the outcome and be a fiduciary check. I still think that that's a pretty profound thing. I was incredibly blessed in the board of my last startup. I mean, I got so much value out of the folks that I had around me. They never interfered with me, but I knew they were there. And that's hard to give up just in the name of getting money quickly and effectively through a platform.
Well, I think that's what about we decided we'll talk about. So I don't know, I want to turn to the audience. I don't know if we have the questions for the app or anybody wants to ask the questions directly. So I know we have people with the microphones running around. Anybody wants to ask the question? To Chris, I'm just here for the...
name is Mo. I'm doing a home decoration startup from Thailand. I'd like to know how attractive it is, Thai startup ecosystem to you, like if you are the investor in Thailand. Startup.
From a pure, she asked about opportunities in Thailand, and you're from Thailand, and so you're building there. So I think some of the great entrepreneurs I met are from Thailand because they're great entrepreneurs everywhere, and I think there's a lot of potential. Thailand has the challenge that other medium-sized markets have, which is you have one language which is different than the rest of the region and all. But again, if you think day one about how you can succeed in Thailand, but then expand into other markets overall, Thailand would excite me as much as any entrepreneur that I would see anywhere. I will also say that 500 Tuk Tuks has a great ecosystem building apparatus there, which again is not only helping the companies within that market, but is helping it expand and look into other markets as well. So I think it's interesting.
Well, we have some questions lined up of Slido, so why don't we take a question from that? Yeah, we have like 5 questions, so would you proceed?
So the first question about Africa becoming China's China. I'm not sure that my friends in Africa would agree with that entirely. Look, China is a very interesting thing everywhere right now because I think there's a very mixed feeling at one level, people being concerned about dominance, and other people who are very thrilled that there's money that understands their struggle in emerging markets. So I'll give you a very precise example. It's an amazing startup. This woman is amazing in a health tech company that she was developing in Singapore, and she said something to me that I've now heard a dozen times since. She said, we don't understand why there's not more Western money here, and we love when it does show up. But she said, whenever you guys show up from Silicon Valley, you try to make us into Silicon Valley companies. Like you have your playbook, and you tell us to behave this way. Some of you even ask us to move to Silicon Valley, like keep your operation in your country, but your headquarters should be in Silicon Valley. Because that's it.
Get to the point of being in the same geography.
And so she said to me, I don't understand why you do that. She said, China worries me because they're so big. On the other hand, China has a huge market. China deploys capital very quickly. That's very good. There's potential in exits. But here's the thing that I respect about China more. And that is no Chinese VC has ever said to me, we want you to be a Chinese company. We expect you're going to be the best Indonesian company there can be. We assume you know how to do that. Now, there are things in a China model you may benefit from. There's technology you may benefit from. You may benefit from our market. But at the end of the day, we were an emerging market not too long ago at all. We didn't just replicate elsewhere. We built on our terms what we wanted to have. And so I find that lots of people in Africa and elsewhere at one level are sort of afraid of anything that big and that fast moving, but the other hand likes that kind of dynamic. I think the perfect dynamic for any entrepreneur is to be able to have choice. So to be able to play off Western investors and local investors and Chinese investors to get to the best term sheet, of course, would be the best thing for any entrepreneur looking to scale up their company overall.
Yeah, Eugene, would you like to add up to that?
No, I think it's it fits into the discussion that we have in terms of, again, the geography and how that's important.
Okay, and did that answer you, Dark Gloss? Okay, then why don't we move on to the next question? And before we move on to the next question, I just want the audience to know that if you press the thumb, if you press like, it goes up, which means that if you recommend the question, it means that more people are interested in that question. So please use that function so that we can know that which question has more higher interest. 네, 지금 보시면 저희가 라이크 기능이 있습니다. 좋아요를 눌러주시면 이게 추천이 돼서요. 더 상단에 띄워드릴 수가 있어요. 그래서 여러분들께서 더 많은 관심을 가지고 계신 질문은 어떤 것인지 알아볼 수 있는 기능인 만큼 라이크를 눌러주시고 또 참여해주시면 되겠습니다. And the next question?
The Belt and Road question is related to the first one, so I'll just touch it very quickly overall. When people talk about Belt and Road, they talk about government policy and obviously the expansion and development around the world, whose infrastructure has value and whose relationship with countries on the ground are controversial and being debated. History will show how this will play out. I think it's early to conclude on it. But in the technology space, the Belt and Road is happening bottom up anyways in the ways that I've just described before. So to give you 2 concrete examples, one of the most interesting, we'll see if they work, but one of the most interesting fintech companies in Latin America is Nubank, which is in Brazil, which is focused first on credit cards. They will go elsewhere in product and they will go elsewhere geographically, raise some blue chip money. They just did a round for 300 million or something like that. Half of that round was taken by Tencent. So they're now showing up not just in one kind of area or geography, but where there are great entrepreneurs, great money will be. So you call that as a subset of Belt and Road? I don't know. It's just a reality that great entrepreneurs, great companies, and great markets is going to get attraction from great money wherever that comes. So I think that's really the way to be thinking about it, and we'll see how that plays out overall. I'm going to ask who are my we're a new fund, by the way. We've just been established in the last year. We're backed primarily by very well-known individuals in Silicon Valley for the most part, and a couple of hedge funds now are going to be looking to join us overall. Our strategy is to invest, also co-invest with our LPs. So there's a $1 to $3 million check that we would deploy very quickly individually, but for larger tickets we would actually bring our very close partners to be able to consummate in that area overall. More and more of these companies are beginning to be intrigued by these markets. They don't want to go in all in themselves yet. This is almost a scout vehicle for them, and I think it's been very exciting and very fun to work with them in that area. Patents for startups, you know, in a way, I'd love you to talk a little bit about this. So the question is, how do you handle with patents for startups that is only patented in one country and wants to go on in global markets?
Yeah, we chatted about that actually yesterday, right? So it's a complicated question, and especially for the smaller economies. And sometimes, so I have, first of all, I need to give a big disclaimer, right, that I'm not a lawyer, so everything that I say have absolutely no meaning. But then my suggestion is that very often, and it all depends, of course, on the startup and the business that they're doing, but sometimes, I think, and that's what hinted in the question, it is better not to have any patents than to have a local one, because any patent is a disclosure. So if you really think that your technology, your company could have a global impact, wait until you have a backup from the venture capitals or from the strategic partner that will be able to assess that and file the proper intellectual protection globally. On the other hand, a lot of the markets that Chris was talking about, the patent is almost becoming the obsolete because the life cycle of the product is so short that you don't need to get protection for 20 years. Because the product will be gone from the market in a year or two, at the best case scenario. And what you left, your biggest value, and again, that you mentioned, is actually the data that you keep collecting and own. So that will not and cannot be protected, but that will be your biggest asset. So again, back to the disclaimer, talk to the patent attorney. But this is not a black and white question. It's very complicated.
Yeah, and he touches on something. I very often, when I'm pitched by companies, including in America, they'll tell me about patents pending. And that's always a little bit of a yellow flag to me, because I'm not sure if they're doing that just to have an impressive line or whether they think it's actually structurally important to their businesses. I think in certain industries like biotech and deep tech, patents actually for long-term projects are fundamentally important. For a lot of the kind of companies that I see, they're intriguing, but in the end of the day, they're not going to win. What's going to win is audience adoption, and as he said before, you know, the data that they create over time. So I agree with you, I think, in that. Someone, I don't see the question here, but it caught my eye before. Someone had asked me what I think about the Korean tech and startup stage. This is my first time in Korea in about a decade, so it's been quite interesting to me to compare notes. And I must tell you, it's a conversation to have over suju or a beer, I think. Because at one level I'm a little baffled, because some of the best technology I've seen anywhere comes in Korea. And the talent of the engineers, the skill and quality is unbelievable. And yet the kind of scale-up, venture-backed kinds of companies are somewhat less than I would expect to see. Now, where I think there's some really great companies are in the core competitive advantages in Korea. So I've seen amazing technology in and around areas I don't invest in as much, but things like in manufacturing, you know, in industry and that kind of stuff is fantastic. It's just not a space that I know as well. In the technology that I've seen, I haven't seen yet the same kind of opportunity, but I believe, like everywhere I see in the world, with the new generation coming and seeing everything that's happening, it's very powerful. So I'm optimistic, but I'm hoping that I'll be seeing more of it going forward. So this is my first re-invitation to this magnificent country to see whether this is something we should be exploring more than we have been before that. Yeah, so on the Philippines, my partners just went there for the first time, and I'm dying to go, because I'm hearing some wonderful things about that as sort of one of the next markets after Indonesia and Vietnam overall. The caliber of entrepreneurs my guys saw were unbelievable. and obviously there's some good market size with connection to the English language. So I want to understand it better. I don't know enough to have a real opinion on it now, but I'm very intrigued that some of the great scaled-up companies that I've met here are turning their attention operationally to the Philippines. And usually when you see a great company like a Gojek or someone like that say, that's on our map, venture capitalists should probably be looking there too. I think it's a pretty good sign of where things are going.
Well, I believe this question has been delivered by a startup based on Philippines. Can you raise your hand if you are so? Because I think it would be better to, have a live conversation, person to person. Yeah. So maybe you can share with us how's it like in the Philippines so that we can get a closer view.
Thanks for your talk. I'm actually part of Gia's shop. We're a corporate venture capital firm. I believe you've met my colleague. I'm actually from the Philippines, and I moved to Korea in 2010. So one thing I've found very frustrating is that when I look at my country, and when I look at what's being developed there, you can tell that the quality of talent is still not as developed as Indonesia or Vietnam. The amount of capital that's allocated to the Philippines by both private equity firms, there's only one PE firm looking at the Philippines, and there are not enough VCs that are going there. Although I have heard of a bunch of Southeast Asian VCs.
Wavemaker, big time.
Precisely. What really baffles me is that how my country hasn't been able to catch up when obviously Southeast Asia is a huge opportunity, and its neighbors which suffer from the same sort of problems, regulation, government, corruption, etc. And the country still hasn't been able to sort of move its feet forward.
Success breeds success, right? I mean, just because it hasn't happened yet doesn't mean if you and I are sitting here 5 years ago, 7 years from now, it won't matter. When I first started looking at Southeast Asia seriously, maybe 5 years ago, I mean, people were sort of intrigued, at the end of the day, curious about Indonesia, but all of a sudden you have a couple of exits or a couple of up rounds. You need to understand that capital are lemmings. All of a sudden, they like to not be pioneers, but when they see some motion, they start to swarm in very interesting ways. And so you have pioneers like Paul of Wavemaker and others. They find a couple of those companies that start to breed that success. It will happen bottom up. The real key question is that while so much happens in an ecosystem bottom up, and with the geographic connectivity I described before, the top down matters. So I don't know what your rule of law is like in encouraging investors to come and take advantage of it, but if there's no doubt about the caliber of entrepreneurs, the question is the success pattern that brings more capital and whether the rule of law allows people to grow and get their capital out. We'll have to see. The jury's not out on that, I don't think.
Thanks.
Yes, and we have more questions.
Someone asked about the success targets. I used to have this belief that particularly in emerging markets, you didn't have to be in the hits business. And by hits business, many of you who are familiar with venture capital know, it's almost like Hollywood, right? You invest in 30 companies, assuming 2 will do very, very well. Most of them will go to 0. A small swath will do okay, and your portfolio returns will be very successful, literally based on maybe 2 or 3 outcomes in a very large portfolio. My hope was that in emerging markets, the way that these companies are beginning to rise, requiring smaller capital, perhaps smaller exits, you could actually build a very successful portfolio that has fewer failures, maybe fewer hyper successes, but a lot to do very well. I have to tell you, having been at this for some time, I believe that venture capital in technology and risk does remain somewhat of the hits business. It is going to be a very smaller amount of companies that will have a defining moment in the portfolio. You hope you have more that do decent enough, 2 to 3 times perhaps return, and understand by unquestionably half of your companies will probably go to 0 or do nothing, which is effectively for 0 overall. That's the way that we view a portfolio we build. If we build 20 companies, we hope 4, 5 can do very, very well. We hope another half of them could do very well. And then we know full well we're going to make mistakes, and you make mistakes all the time. You make mistakes because you believed your own hubris. You made mistakes because you thought you knew something better than the entrepreneur, which is the same thing as hubris. You make mistakes because you bet on the wrong entrepreneur. You made mistakes because something happens in the competitive environment that you had no crystal ball about. You make mistakes for no reason at all. The entrepreneur is great, the idea is great, she tried to pivot to new things and it just didn't take for whatever reason. And one of the key things is to not take it personally, which is very hard because when I'm investing other people's money, I take it very personally. I don't sleep at night. It's hard on that area. But at one level, you have to understand it is the business that you're in. And one of the most important things that you can do for your entrepreneurs and for your LPs, your investors, is to be steady. One of the things I've tried to do when I run companies, one of the things I try to do as an investor is never to surprise anybody. That's on the upside. Like, I don't want to have bad news and my LPs don't know about it. I don't want my entrepreneurs to have bad news and I hear about it in the press. Like, I want to be able to build an environment where people are just being safe and open, because if you understand what you have, you can actually limit the number of mistakes that you'll end up making. It's easier to say than to do, but I think that's where more of the success actually lies.
Well, it's
I think
funny
I have
because
a very quick comment on the VCs also. I agree about the hit business. I think nobody likes it. But I also want to get no disrespect to the classical VCs, but I think they're missing a little bit of the kind of a little bit behind in terms of how the actual due diligence needs to be done. So versus the kind of not the standard VCs like you are, and I'm not sure if it's a compliment or not, but there's definitely something different in terms of how due diligence needs to be done in this new sort of economy when the geography stops making that much of a difference.
Look, I think generally speaking, there is real disagreement on this. I am very, very serious about due diligence. I spend a lot of time on it. I don't spend weeks on it, but I focus on it. I reference check my entrepreneurs in incredible depth. I had some background running a big journalistic media company, and so I have some of that background in me. And I think it's the right thing to do, because at the end of the day, you're betting on her to win. So her character, integrity, tenacity, track record matters. But there are other investors who think you can overdo that. So there's one very famous investor, I respect him, he has a very good track record. He almost stops doing due diligence because there are companies that he due diligence so much he got scared off, and those companies ended up being very, very successful. So when he looks at it from a portfolio basis, the upside of more due diligence sometimes complicates the gut instinct that he had and what he wanted to do in any event. It's an interesting argument. He has a track record to justify it. It's just not simply the way that I will invest. Just different ways of doing things overall. Someone had asked, what are the must-read books for people that are looking to be in tech and startups? And there are several that have come out that I wish I had when I was building companies. It's not like a book gives you all the answers by any stretch of the imagination, because there's no better training to being an entrepreneur than being an entrepreneur. But the book that I mentioned before, Ben Horowitz's Hard Thing About Hard Things, which is really his journey. It's almost not about venture capital at all, except as he dealt with venture capital as an entrepreneur. But it is the most personal, deep, ugly description of what it really means to build a company, and some of the best things that he did and mistakes that he made to be able to navigate what ended up becoming a successful outcome after he had, I think, 7 near-death experiences in that company. So it's a wonderful book. I wish I had it. By the way, he has a new book coming out this fall, which is, I'm going to miss the title overall, What You Do Is Who You Are, something like that. And it's a book about building culture in your organizations once it becomes successful. I have to tell you, I've read the Galley. It may even be better than the first book. So he really has mastered this idea. I think it's very powerful. Reid Hoffman has had some very good books. The Startup with You is one that's just helpful for you as an individual to think about cultivating your relationship. But he's written 2 other books subsequently, and the books are kind of a triad of how to think about scaling companies and recognition to be able to build very quickly and how you hire your teams. And it's a kind of a Silicon Valley heavy book, but they're very interesting, and I think the analogies are quite purposeful. A little bit out of convention is to read 2 very good books about venture capital. And you think as an entrepreneur, like, why would I read these books? Because if you understand how a venture capitalist is thinking and what his or her motivation is, you will be much, much stronger as you look for venture capital and then you go through the painful negotiation strategy. So another Andreessen partner named Scott Cooper, who's the president of the company, has a new book just out. It's like Secrets of Sand Hill Road. I can't remember the name of it. Fantastic. It is a very good, clear read on literally how you raise money, what you go about it, what venture capitalists think, what entrepreneurs think. It's a beautiful handbook. And the perfect complement to that is another great venture capitalist named Brad Feld, who comes from the middle of America. He's not in Silicon Valley. And he wrote something called, I think it's called the Venture Handbook, which is in his 5th edition. It's a little bit more detailed and technical than Scott's, but it's an absolute must-read for this. Even as a guy who's been an entrepreneur and I who now does venture capital, I go back to both these books to kind of check and make sure I relearn things. So they've been very, very helpful to us in that way.
So maybe among them all, what would be the book that would be called as a Bible for the venture capital?
I would read all 4. There are
All
4
4.
Gospels. in
And
the
for
book
you,
Bible.
Eugene? And for you, Eugene, what would you choose?
Yeah, no, again, I'm less read in the venture capital side of business, but I think these are all good. And the other ones that I think is just for the general entrepreneurial. I think all the 4 books of the Heath brothers, and they're coming with the next one. I'm not even sure what it is. It is extremely important because it really talks about the other things. I mean, how you make the first one was make to stick, how you make the presentations, and what Chris has mentioned. I mean, you need to know your audience before you present it. And yes, you learn who are your what the VCs, how they're thinking, but now you need to learn how to package your information. And then there was another switch and change. So about the change in the organization, how you make it. So there are 4 books already altogether. They're very easy read, but they're very deep, and you can almost.
We all like 4 books.
Yeah, so Christopher, would you rename the 4 so that everybody can write them down?
Yeah, so the
This
first.
is your chance, everyone. The first book.
Ben Horowitz, Hard Thing About Hard Things.
Hard Thing About Hard Things.
And remember,
That's the first
a new
book.
one is coming from him this fall
Yes.
that you should look for. The second one there are 3 books that Reid Hoffman, who's the founder of LinkedIn, has written, and all 3 are good for different reasons. Startup of You is really kind of your own development as an individual, and then he has a book called The Alliance, which is about your relationship with the team that you build and the employees you build. And now he has a new book called Blitz Scaling, which is about growth, hyper-growth, which is superb. It really is probably the best book on that. And then I mentioned 2 books on venture capital, one by Scott Cooper, Kupor, and then one by Brad Feld, Feld. So you see, if you keep asking me questions, I'm going to add new books. I'm up to 5 now.
Yeah, I thought you said 4. Well, I think since we have talked about beginners, I've just saw the question that is at the very up. If you want to become a partner with, if they want to become a partner with you, what would be the key thing as a person that does not have a background on venture capital?
So right now we're not looking to grow from a personnel perspective, but we think a lot about as we grow, does it make sense for us to scale by putting people on the ground? So at the end of the day, I have to tell you, if I found someone with perfect character, great integrity, incredible sense in network in a venture capital sense and in an entrepreneurial sense in a given market, that's the woman or man that I would love to bring to bear. It's ideal if they have investment experience, but away us in our headquarters, we're kind of the investors. As we look to expand, we're going to be looking for people with great market expertise and tenacity, and we can teach them how to do investing over time.
Yeah, and I think this question is getting involved with the latest question: which industry do you focus on investing? So,
I touched on this a little bit
extent.
before. So fintech and lending is one. Marketplaces, particularly property tech, is a second one. And I like last mile logistics, and that can include things like trucking, but it's other areas of just getting stuff to individuals in very tough markets.
So I think we can scroll a little bit down. 네, 밑으로 조금만 더 내려주시겠어요?
This is a fantastic question, and it haunts me a great deal. I'm thinking about it right now. Considering the number of VCs and funds popping up globally, how do you develop, maintain, and add competitive edge versus other firms? And this is a totally different conversation than if I was sitting here even 2 years ago. Because what has happened in the last 2 years has been the massive rise of more local established VCs or ones that are raising their second fund, a lot of new players doing smaller funds, family offices whose new generation knows something about technology and want to play. Obviously, large players like Naspers have been there for a while, but they're bigger than ever. SoftBank is now becoming a huge force at all scale. People talk about SoftBank deploying $100 million, $500 million, $1 billion. SoftBank in Latin America has written a $500,000 check. That's a huge dynamic. The rise of China, as we described, have made this very, very important. So I think at the end of the day, what is the edge that you can bring to bear? There are maybe 3 kinds of edges. So there's a firm we often partner with called QED, and their edge is that they understand in fintech and credit almost better than any firm that I know in America because they spun out of Capital One. So they not only have a very good global idea, but they have decades of understanding how to develop into and build credit cards, and things which are related to it. So expertise is absolutely an edge which is invaluable to entrepreneurs in every market. For us, we think that pattern recognition across these markets with this connection to Silicon Valley is a very valuable asset to help accrete value for the entrepreneurs, which are very powerful overall. Third, brand and network matters tremendously. as Andreessen Horowitz has done several one-off investments, the very act that their expertise, their data, their experience of what companies succeed and what entrepreneurs succeed or not is absolutely invaluable, which is why I'm glad I've got people like this been investing in us. At the end of the day, I think that's the best way to do it. But the fundamentals of the question, if you can't distinguish yourself to the entrepreneur, if the entrepreneur doesn't say, I want you on that cap table for a reason that you can't articulate it, you're dead. I don't care how much money you have. Well, if you have a lot of money, people tend to be very forgiving. But all things being equal, you'll be dead.
Yeah, maybe next question would be right. Which are the industries that you consider to be most promising?
I think we've talked about that.
Then let's go on. Maybe I think we have time for one or two more questions.
So maybe somebody from the audience want to add
Yeah, that would
directly,
be great.
because it feels like we're recycling some of the. So maybe people typed in one while Chris was still answering. And I have, while you're thinking, one last question. So does it really matter these days where the technology or money is coming from, or we're totally on a different level?
Are you asking geographically or what?
Yes,
way?
geographically, yes. I mean, we're still about the countries. Right?
Look, I think what matters is the caliber and quality of the technology and its scalability and ability to access it and use it. So at the end of the day, that's why Silicon Valley still matters, right? Because at the end of the day, not only do you have a network effect of amazing talent, you have the ability to access it and expand it very rapidly overall. What's very interesting that even in rising markets, network effects of talent are starting to form. We'll see if they succeed, but my favorite example is Dubai. Dubai is not perfect, but the fact of the matter is if you're a rock star entrepreneur in the Middle East and you want to expand across the region or to other emerging markets, you may keep your engineering and your best assets in Cairo or Jordan or Lebanon or wherever, but you go to leapfrog into the world, into Dubai. And therefore, the women and men there are aggregating our amazing talent. When you get that kind of flywheel of entrepreneurial talent, I said before that geography doesn't matter solely, but it certainly has a lot of positive benefits overall.
I think there were a question, right? So can we get the microphone?
네, 이쪽으로 마이크 전달 부탁드릴게요.
Sorry, and there's another one in the back.
네, 그리고 질문 맨 밑에 걸로 올려주시기 바랍니다.
When you were young, what was
Like what age? 몇 살 정도로 이야기하시는 건가요?
what was most formative in forming your integrity and tenacity?
I don't think that there's any question that in forming a sense of character and integrity, and I'm flawed in many ways, started with my family. I think that the biggest impact of it was not only what my family taught me and what the best mentors taught me, but their actions. I think about the women and men who formed me outside of my family, and I can remember incredibly moving, poignant conversations, times when they challenged me in very profound ways. But what stuck with me is what they actually did and who they were in their markets, what they were willing to trade off in order to maintain that sense of integrity and character. And there are times, particularly in the startup space, where you can easily rationalize cutting a corner. And as an entrepreneur, sometimes you have to cut certain corners. But at the end of the day, the best investors, the best customers, the best product people, the best team are going to want to know that when they deal with you, your word is your bond. And if they think that you're going to get screwed, that tends to play for itself out. But I really think about my direct family and the mentors that I had by their actions as much as by any specific message that they taught me. And hopefully in the companies that I mentor, hopefully in my own kids, some of that rubs off. The problem is all the things you do wrong rub off also. But that's the truth.
Yeah, I think I want to. First of all, there is the assumption that we're no longer young, I wanted just to add, as a consultant on the side, I always keep reminding people that transaction and business is done between people, not organizations. So the personal connection and reputation is the only currency that works there. So just again to put a little bit more.
It's very well put.
Yeah,
Is there
I
one
heard
more?
that. Yeah, there was a question at the back, right? 네, 질문해 주신 분, 네, 맨 뒤에 분께 마이크 전달 부탁드립니다. There are so many questions that we would like to deal with. The time tells us this would be our last questions.
Thank you for this opportunity. I want to ask you, so you've been here like a decade ago and now you're here in 10 years. So what is your general impression on Korean economy and the Korean startup scene? And if there's any recommendation you can make towards regulatory innovation in Korea, what would it be?
I don't know enough about the regulatory standing here to be able to be intelligent, specifically to Korea. What I can say as a guidepost to almost any country I go to is that if you're on the side of the freest movement of goods, services, ideas, and capital, and either you are having laws that are and regulations which support that, or you're pulling friction out of it, you're on the right side of history. I mean, it sounds very trite and very simple, but at the end of the day, the best entrepreneurs want to go where they win. It's the most mobile generation in history. By that I don't mean smart devices. I mean great talent will go to where they can win, first and foremost. So anything that convinces that talent, their investors, their customers, and everyone else that they've got an opportunity to be able to succeed and grow without limitation, they know. I mean, I have talked to entrepreneurs who have no great macroeconomic thinking. They know full well what's happening in their market versus friends that they're seeing on their mobile devices. They know what it can take to win. And I think that really the first thing that the best governments have done, and again, Brazil is not perfect, Indonesia is not perfect, but the one thing I admire about both of them, they spend an unbelievable amount of time, not just with the best venture capitalists, it's kind of the big money families, they're actually talking to the entrepreneurs and saying, what do you need? Like, what's stopping you from doing what you're doing? And when that actually is listened to and understood, the broader ramifications on the economy actually become imminent. It becomes a win-win. It's not us versus them. One of the other panelists talked about before, I don't know if you guys went to the Gojek one, that the epiphany he had that American companies have been much slower to have is that if you actually meet face-to-face with people and explain why you're thinking the way you think and the opportunity that can be beneficial, and listen to the woman or the man on the other side about what their concerns are, it's amazing how you can actually make things happen in very interesting ways. The answer to the economy gets answered by this. You unleash this, the economy is going to take care of itself. I think that's proved in any great entrepreneurial ecosystem anywhere.
Well, I know the time is over, but as an MC who controls the flow, I'm going to give you each 1 minute in order to give the audience the last comment. Starting with you, Eugene.
You're the star of the.
He needs to
We're
think.
co-stars. So.
Well, I think again, I think it's nice that I'm actually a little bit surprised, as maybe for the whole conference, is that there are so many people that think a similar way. I mean, this has been very refreshing, especially again for many of us who've been fighting this wrong perceptions, both about the different economies and how the entrepreneurship done. So I think it's very, very refreshing and gives a lot of hope that there are so many people who think alike. And as I already mentioned, I'm a very big believer that the things are really done between the people. So some of the things country-wise and between the organizations need to be realized by the fact of communicating. Because everything is done by relationship, and the relationship is always two-way. So thanks for the opportunity to refresh some of the old relationship and start the new one. I think it's very, very hopeful.
I mean, it's hard to add to that except to confirm that when great entrepreneurs from everywhere, anywhere in the world meet, they're the same people. I mean, it's a shared language. It's a shared problem solving. I mean, literally, it doesn't matter what corner of the world, these women and men together, you can see in their eyes what it is they want to do. And I agree with you, this conference has been an amazing expression of that, and I just see that throughout Korean old friends and new. And the last thing I would say, I think is very obvious to your audience, but I will say it anyway. I mean, there's no time in history I would rather be alive than right now. We live in an age of wonders. In my country, there's a sense of kind of doom and despair, which I don't understand. There is not a problem that we can't go after with amazing efficacy and capability because of the tools people like you are creating. And so I'm going to be very excited to see what you all build and look forward to staying in touch. So thanks for spending time with me at the end of a long day. Thanks.
Okay, thank you, Christopher and Eugene. That was indeed a fruitful session. Please give them a big hand.